a day. Right now, let's go check out these markets here. Really a flat-ish market as we speak today. Right now, the Dow is off 18 points. It's trading at 16,376. S&P totally flat. It's up 8 cents. Composite up 18 pennies, so that is flat. And the Russell 2000, after a big explosive day to the upside, it's trading off about $3.60. In any event, we've been making this call here wait for quite some time. So let's go out to New Jersey to Mike, who's in Pennington, New Jersey. Mike, thanks for calling. Thanks for holding. How you doing today? Uh-oh. Do we have Mike? There we go. Okay, I can kind of hear you out there as you're coming in. Mike, thanks for calling. Thanks for holding. You wanted to look at Simon Property Group, so tell me what you're doing, what you're looking at, how I can best help you.
Well, I think that mall traffic is probably off, and the stock is up, and thinking this is short.
Okay. So if we take a look at Simon Property Group, trading at $164. Now, I've got a daily chart up on my screen out here. And if we take a look at what you're talking about some very fundamental elements, and you're right. Mall business seems to be down. Now, I don't know if if Simon Property Group, I don't know if their valuation is just based on the rents they collect, if it's based on the value of the real estate. Who knows what it totally. But if we take a look at what the stockholders are communicating to us at the moment, yesterday was a very strong day for Simon Property Group, in that it gapped up. Did it with 1.5 million shares, and in doing so, it actually took out a swing point, a B point, and it did it with volume. That's the level that I'm looking at here, Mike, is the October 24th area, 160.50, only 1.3 million shares. This says, because you now have a confirmed A to B equals CD to the upside, this says that Simon Property Group ought to make its way up to about the 167 area. And at 167, it does two things. It forms a Gartley sell pattern, a 0.618 Gartley sell pattern. And what it's also going to do for you, it's also going to test a swing point, its next swing point, which only has 821,000 shares, and that is from July 23rd, 2013. Let it, assuming that it's going to continue to move higher here, let it test that 167. It's 167 even, Steven. Let it get above the high, back below that on less than 821,000 shares, and then wait for a reversal signal. Wait for some type of bearish candle, and then if you decide that that's the trade that you want to the short side, then I would say take that trade. Now, that's the first one that I would look at. The second trade that you could look at here inside Simon Property Group is the mere fact that it gapped up yesterday, and today right now is a sideways trading range. If by any chance tomorrow or the next day, whenever it happens here, if it were to gap down, meaning that it opens below 163.08. Let's just say it does it tomorrow here, Mike. It gaps down below 163.08, never gets up to that. You would have an island reversal. And then I would go ahead and I would give priority to the island reversal pattern. But right now, this is actually, even though fundamentally with regard to, what your observations are in the market, I can tell you that the series of stockholders are saying this actually wants higher price.
Okay. Good.
All righty.
Time for another one?
Sure, absolutely. We made you wait, so you get a twofer as we speak.
And I'm a subscriber of yours also. Again, it's been on and off, but I'm back to subscribing. So it's
thank you. Thank you. I appreciate that.
Yep. You do a lot of work for that too. So.
Yes. Yep. I do want to give everybody a really good idea as to what's going on in the overall market out here. So actually, because you're a subscriber, you get to stay on for the entire hour. How about that?
Oh, there you go. Better.
What's the next one you'd like to look at?
Diamond Offshore as a long.
Diamond Offshore. What's the ticker symbol? DO?
DO.
DO, yeah. So if we take a look at Diamond Offshore, now are you looking for a short or a long here?
Long.
Long. Okay, good. This thing has really been hammered here to the bottom side. So you're a subscriber. So let's actually do this. Let's put up the Rhodes Momentum Indicator chart out here, and we're going to use that as – I'm going to take a look at this on the daily and the weekly. Now, before I do that, I'm going to go back to since I had Simon Property Group up here, and I've got it on my chart. The top portion, as you're familiar with, the top portion of when I split the screen out here is the weekly chart. And the weekly chart inside, using the Rhodes Momentum Indicators, has made the last three the last three indicators that it has formed have been these red indicators telling you that buyers are in control of this equity. So even the weekly longer-term chart is also confirming what you and I were taking a look at on the daily chart as well. So let's go ahead and put out Diamond Offshore. DO is the ticker symbol. This will take just a moment. What we want to do, folks, is we want to take a look at, hey, what's the message on the weekly chart out here? Oh, boy, that is nasty. The weekly chart shows that this thing has been in a real long-term, gave you a real big sell signal back here, this bearish engulfing candle, the week of July 26, July 29, 2013. And so this is going to have some real strong resistance, even if we were to find a buy point. We'll look for one here. This tells us that it'll have some real strong resistance at about $49. And it's at 47.42, so that's not going to be a very good reward to risk. And 51.27 would be also some strong resistance. So on the weekly chart, on the daily chart out here, here's the benefit you've got on a daily chart. I tell you what, Mike, would you be kind enough to hold through the break here? You have to, because you're on for the rest of the hour. Yeah. So we're going to go back to my co-host. Oh, we've got another co-host, Brent in Martinez, California. We're going to get to him as well. 877-927-6648. We come back. We're going to take a look at Diamond Offshore with Mike in Pennington, New Jersey. Be right back, folks.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White and Tom O'Brien will be hosting a live study session for anyone with a subscription to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for the Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the Charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Session thus far here, an hour into it. Dow off 16 points. The S&P and composite, they're really flat. Russell 2000 is back 3 points. We're going back out to Pennington, New Jersey, to our man Mike. We're taking a look at Diamond Offshore. DO is the ticker symbol. Now, Mike is looking for a long entry into this, and Mike, you're a pretty smart guy out here. Diamond Offshore has been trying to hammer out a bottom, and I mean that by taking a look at a couple of candle sessions that have formed out here. The first hammer candle that formed was February 14th. The low of that hammer session here was price point of, and the bottom of a hammer ends up being your support level, folks. The bottom of that was 46.26. The very next trading session actually tested the bottom of that hammer and formed a second hammer candle out here. That says, and that low was a bit lower out here. That says, Mike, your support, if you're going to go ahead and take a entry into this trade, is 45.32. Now, your preference here is to just be patient and see this thing close above yesterday's high. That would be your first indication. If you get a close above 47.46 out there, then you could dip your toe in the water and take a trade on it. So whatever that price level might be, again, it'd have to be a close above 47.46. Where you'd have to have your stop is somewhere just below the low of that hammer candle, 45.32 out there. So, and then just simply take 1% of your trading capital, divide it by the your entry point versus where your stop is, and that'll tell you how many shares it is that you would need to buy on that. And that would be the now if you don't close above this level here, the other spot where you could buy it from potentially here, and it's more risky, but if you thought that was the spot to do it, because the weekly chart is not giving us any good indications out here, would actually be at the bottom of that hammer candle. The best places to enter any type of trade on a hammer candle is about 50% of the way into the actual wick of that bar, because you've got pretty good reward to risk. But that's all that's doing. It doesn't tell you the trade is going to work out or anything along those lines. So that's what I would be looking at for Diamond Offshore. But is there something else that maybe you're looking at that I'm missing here, or something that you would have a question about?
The market's been so strong, and I don't like to chase up here a lot of these stocks like Chipotle and Facebook.
Yes.
And this is a lower stock which I think has good fundamentals.
Yes.
That's why I looked at that one. I have another one too. If you don't have anybody in the queue,
I've got one guy in the queue, but that's okay. We got a little bit of time here. Tell me what it is, and I'll tell you what. I'll do that stock after I go to him, if that's okay with you.
Sure. It's Heartland Payment. HPY.
Which one is it? Which one is it? HPY.
I got in at 24.50. I got out at 48, and now I'm looking for a re-entry point.
Okay, all right. So I'm going to go to Brent, if that's okay with you, and then after that, in the next segment, we'll take a look at HPY for you. Okay.
Sure. I'll be listening.
Absolutely. Hey, thanks for calling, and have a great day, and thanks for being a subscriber out there. Let's go to Brent in Martinez, California. Brent, thanks for calling. Thanks for holding. How you doing today?
Very good, Steve. Good morning to you.
Good morning to you. And you want to take a look at Eagle, one of the dry shippers out there, I believe. Are you in the trade, looking to get in? Tell me what you're doing, how I can help you.
Yes, I'm long from about $3.50, and just
nice
wanted
move.
to get your opinion where you think this could be heading to. It seems like it has some volume today. It's making a decent move. So just want your opinion, please.
Yeah, no problem. So you are having a nice move out here. You always like to see that after you have a doji candle at a resistance area, and that's what you had yesterday. And the area of resistance here that I'm looking at, Brent, was the candle session from December 27th, $4.93 out there. And at $4.93 yesterday, and that had volume of 2.5 million shares. Yesterday, you pushed up into it with lighter volume. Don't necessarily like to see that. But it did. It got up to $4.99, closed out at $4.70, and it opened at $4.75. So you had a little doji candle out there. You are now up above that area. You'd like to see it today have more than 2.5 million shares, and I think you're going to get it because you're at 1.1 million shares. And what that does is that would then confirm an A to B equals CD to the upside for you in this equity. And the 1-to-1 would take it to 559. Now, the logical area here to look at is the actual swing point, because at 559 it gets you so darn close to the November 4th swing point. That's where I would be eyeing it. If I would, now I would go ahead and adjust my stop. I would use a trailing stop of sorts out here. And I would be eyeing the level of about the low on the swing point from November 4th is 591, and the high is 642. And so that's and the volume there is 1.4 million shares. Now, if it's coming in there with volume, can you stay on through the break here?
I'll have to go, Steve. I really appreciate your analysis. I'll just listen off there if that's okay.
Yeah, no problem. Oh, no problem at all. We'll come back. I'll finish up at Eagle Outfitters for Brent. And if you'd like to have me take a look at something, just give us a call at 877-927-6648. Be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Again, flat market out here. Dow's off 8. S&P is up 2. Composite is up 5 points. I'm going to go back out to take a look at Eagle Outfitters. EGLE is the ticker symbol. I think Eagle Outfitters is the clothing company out here. This is a dry shipper out here, Eagle Bulk Shipping. Now, Brent got into this. Boy, what a nice entry. This thing had broken out, had a little sign of strength on January 15th, gapped up. Low there was 380. It looks like he bought it right as it was coming into the lows here from January 14th. So he's in about 350, I think, is what he said, and it's at 521. So the first thing that I would do is I would have a trailing stop in this. Each day, Brent, probably about 44 cents. The average true range over the last 10 days has been 27 cents. You multiply 27 cents times 1.618, it gives you a 43-cent trailing stop. And if this is going to continue its momentum higher, that should never come into play. And I would use it 43 cents off of the prior day's close out here. So it looks to me like, again, 559, 617 is the area where this ought to head to. You're going to get a confirmed A to B equals CD to the upside, and you're just going to have to continue paying attention to this as it gets into that on a daily chart here, the 642 to 591 range from November the 4th out there. If you're coming in with more than 1.5 million shares, just keep rolling. Let this thing continue to move north. You want to see volume accelerate. Let's go to Ron in Denver, Colorado. Ron, thanks for calling. Thanks for holding. How are you doing today?
Fine, Steve, and I just want to congratulate you on the super job that you do.
Well, thank you.
I had a question. I bought a call. Well, anyway, I bought calls on INVN.
Yes.
And for me, it's doing a breakout. But my question is, how do you determine how far you think a breakout might go?
Sure. You know, what we use for price projections are really a couple of different tools. The first one you always want to look at, in my opinion, the easy one, is going to be prior swing points. And if you would take a look at Invincis, well, you can't do that, can you? Because it's broken out above all swing points. So that one we take off of the table. So then you take a look at expansions of moves out here and expansions of swing points. So everything that I'm going to do is going to be based on swing points out here. So in the case of Invincis, what I'm going to do is take a look at an expansion of one of the breakout areas, which in this case here is October 17th high, 2182, down to the swing point low. It's a high volume bar down here, which is something you've always got to be cognizant of at this stage, and that's the October 30th level. And if we take a look at our swing point expansions, 23.62 is the number. Now, you've already hit that here today. So 2362, that's a logical area. Now, what I want to do is I want to take a look at A to B equals CD patterns. In this case here, let's use the larger. We can use a couple different patterns, but I'm going to use the larger one, and that's going to be still coming off of that low out here on October 30th. And that October 30th low was $15.20, and it makes a run all the way up to the price level of $21.80 on January 22nd, pulls back, into the low here on February 5th of 1776. Now, the reason why I want to take a look at that A to B equals CD is because it's giving you a ton of information along that C to D leg. And right now, this is telling us that the move here is strong. It's stronger. Now, you also want to see the B point cross with volume. The B point had 2.8 million shares on January 22nd. And what you did yesterday was 4.4 million shares. That's a beautiful trade, because that's a confirmed 1-to-1 A to B equals CD up that says you should get to 24.38 out here. And, that's what this is. That's the minimum as we speak here right now as to where this is going. The reality is I could easily make the case that this is going to make a run for $26 or so, which would happen to be your 1.618 expansion of that same set of swing points that we looked at earlier. So so I went through kind of like a three-step process. Again, Ron, the first place I always look for is where's my swing point that it's going to be headed into, and that's your logical reward type area, and that's where you're going to measure volume. In this case here, that's history because we're beyond that level. Then I take a look at expansions of swing points, and I take a look at what's going on the lightning bolt pattern, the A to B equals CD out there. Does that help you?
Yes, definitely, because I thought it might get a shot at 24, but I didn't know what it would do. What the chance of going beyond that or not. I didn't.
What's also nice, Ron, is that today you've got additional follow through because we've only been trading for just a little over an hour and 9 minutes. And today you've got 2 million shares. Yesterday, I don't know what the volume makeup of this. I'd have to put on a short-term chart. But in essence, mathematically, you've got even more volume today than you did yesterday. So I think you've got a really nice trade here. Now you've got the call option on this. I don't know when that expiration is, so you've got to take into consideration, the amortization of that time element there. But I can tell you, so when I'm using these tools here, this doesn't tell me when it's going to get to the price level, but it does say that it is likely to head up to not just $24. I'd have to say $26, and maybe beyond that for all I know.
Okay.
All righty?
Well, yeah, that's great. Thank you very, very much. Appreciate it.
You bet. And hey, very nice trade. Next time you have a trade like that, give us a call on the show, would you?
Thank you, sir. Yeah, just sometimes I luck out. But we'll see until I get out. You never know.
That's true. Good point. That's right. There's no profits until you've actually taken them, right?
Yeah, right.
We all know that. We know that too well, don't we? So use a trailing stop.
Absolutely.
Yeah, absolutely. Hey, thanks so much for listening. Thanks for your comments and calling.
Thank you.
All righty. So, again, folks, really kind of a flat market now. A heck of a lot of energy used yesterday. Let's just go take a look at what's going on inside the actual ETFs out here and see what we have going on here, volume-wise and so forth, and actually what we have going on at any of these highs out here. We're going to start with the Qs because I think that's probably the one that's most important for us to pay attention to because it was the weak link out here yesterday. Now, the Qs had a key reversal session, and they had that on February 28th. That's key reversal session when you exceed the prior session's high and low, when you're in an extended condition, and then you just simply close in the opposite direction. Did all three of those on February 28th out there. Now, the high is $90.96, 48 million shares there, but yesterday you tested that with only 33 million shares. So it was a rejection on price and volume. And the Qs here, certainly the composite, we took a look at the composite. I don't know if I did it this hour, but if I didn't, I'll just tell you that the composite actually got to on the monthly chart, got to the March 2000 all-time high swing point low. That means the low of the actual swing point for its all-time high out there. Touched it, and that's pretty impressive out there. And the close inside that says, it wants higher price out here. Now, what the Qs are doing as we speak right now, they are taking out the highs of yesterday. Volume-wise so far is 7 million shares. Now, if by any chance you were to see more than 48 million shares today inside of the Qs here, it actually sets up an A to B equals CD to the upside. And that would be a doozy. That would be a real doozy out here because your A point would have to be your small A point, would be your February 5th low out here at $83.74, and your B point is going to be that key reversal session from February 28th out there. But one thing at a time. I mean, it's not even a retracement that really took place during those two sessions out here. But the key is going to be what's going on at this high out here, volume-wise as well, at the $90.96 range. We'll take a look at that tomorrow morning to see what it did. But if we take a look at let's look at what really moved out here, what really rocked the world, was the small caps, Russell 2000. I mean, the reality is it confirmed an A to B equals CD to the upside yesterday with 112 million shares. And that A to B equals CD to the upside pattern here, and this one is a valid, this is a very valid A to B equals CD, just simply because the retracement that took place through February 5th out here. And that says that it wants to get, the 1-to-1 takes you like $121. No way. If this is going to move higher, 125.61 is really more likely the target for where this thing would head to. So, you're having an inside day, it's trading back $2, that's not a big deal. If we put this even on a shorter term chart, time frame chart, 10 minutes out here, let's see what we see out here. This thing had, right off the get-go, for the very first 40 minutes out here, nothing but volume coming inside of the IWM. I mean, stakeholders just truly pushing it higher. And if we take a look at any kind of volume bar, well, that was the 4 p.m. close out there, and that volume bar was not even dealing with the volume off of the bat out here. So take a look at what's really been going on here since we've opened this morning, or the open this morning here taking place and moving down just a tad. But take a look at how volume is dissipated on even any kind of a push lower out here. It's actually pretty darn bullish when you look at the IWM on a 10-minute chart. There's certainly no selling that's going on. One could argue, okay, maybe you've got distribution going on. Now that's a possibility. But on a daily chart, and how about a weekly chart for the IWM? Let's just look at the weekly chart for the IWM and see what it has done out here. The weekly chart showing that nice, big, strong V bottom. Last time the IWM had a V bottom shape was the lows that were formed back in November of 2012. Big wide-ranging bar to complete that V, and it just continued to motor higher out here. By the way, that swing point from September of 2012, that had 210 million shares, and that was taken out with 259 million shares. So what do we got going on here this week? We're just so early into the trading session, but we can just take a look at last week just to see what it had. And that was your 147 million shares on January 24th, the week of, and last week you were pushing in with 189. 189 versus 147. Last week already confirmed a breakout inside of the IWM. Let me see. The high was 117.37, and you closed at 117.52. Yeah, see, the IWM even last week confirmed the move up here. So that's pretty, it's pretty impressive. Hey, the blue diagonal line going across my screen, those are the primary trading range boundary lines. So for it to pause here, pull back or something, I can tell you one thing. If the market is going to break out to the upside, yesterday was a pretty good indication that one of the places to be looking at is the IWM, the TNA out there as a 300% or, there's a 200% the ETF for the Russell 2000 as well. So it didn't get any more stronger than yesterday. If I go back to the daily chart, I see a question in the den. What would nullify the IWM confirmed A to B equals CD to the upside? It would have to be some kind of, well, first, if it gets back below the B point, that always makes things a little bit more complicated, but it could be a complicated A to B equals C to the upside. So that's at 117.37. You like to see it hold that level, but it's confirmed. You'd have to see volume. Bottom line is, the answer to your question, you'd have to see volume off the top. You'd have to see some kind of volume breakdown inside of the IWM to just totally nullify it. What you'd really need to see is, let's say that today's trading session here travels sideways and, for whatever reason, whether it's something going on in Russia, whether it's some comments made by whomever, really, when we come back and we take a look at charts, we don't really care what it is that caused it. What would be a problem here would be tomorrow's session. And it doesn't have to be tomorrow because tomorrow's Thursday. It could be Friday. But if there were to be an island reversal at all-time highs, that would basically nullify everything until price could get back above that island reversal. And in the case of the IWM, that's there. Because any type of gap down tomorrow below 118.18, and that would say all holy heaven, heck, in the IWM would be breaking loose out there. Now, I'm not saying that's going to happen. And here's the problem with that. Here's where I have a problem only looking at the IWM. It's why I say you really got to go take a look at the futures contract, is because the underlying instrument of the IWM, first, it's all the stocks that are out there, but you got to take a look at the futures markets as well. So, the gaps inside the IWM or SPYs or diamonds or what have you, you've got to take it in context as to what you see, in my opinion, going on inside the futures charts out there. So in any event, that's what's going on inside the Qs, inside the IWM. We ought to take a look at the SPYs and the diamond just as long as we're out here. We take a look at the SPY out here. The SPY, got above a swing point with volume yesterday. That swing point being February 28th. That had 150 million. You're up above it with 167 yesterday. If we take a look at expansion, so, we had a call from Ron in Denver. Hey, how do you project where price is going to go? Well, remember, same tools. Very simple. 3-step process. Where's your swing point? Well, in the case of the SPYs, we don't have a swing point to the left to look at. We're above swing points. Okay, beautiful. What's your expansion of swing points? Okay, go from the highs from January 15th, that's at 184.94, down to the low swing point, that's February 5th out there, so that's easy, 187.99. So we're right there. We're trading 187.87 out here. So you're trading at that level. That doesn't mean that you go ahead and sell. That's just giving you your price projection out here. And then you go take a look at your A to B equals CD pattern out here. Now, when you have a retracement, my personal belief in taking a look at A to B equals CD patterns, you got to make, at least a 0.382 or maybe just a 0.32 retracement pattern out here. And in that case, inside the SPYs, it didn't do it. We had a one-hit wonder, a one-day wonder right now to the downside, and trying to use the March 3rd low as your C point of the A to B equals CD. To me, that's kind of suspect. So since I have trouble doing that, and then what I really do is go take a look at the larger pattern. And the larger pattern takes me all the way back to October 9th, and I think that's the one that you look at. Even though it's a doozy, folks, it's the one you look at because it's the one that actually sticks out on the weekly chart as well. In this case here, that price projection on the weekly on this A to B equals CD, and let's see, was a swing point pass with volume? It was. So it qualifies. That says that the price projection here would be 195, 194. So 877-927-6648. Dow's off 40, S&P down 1. Be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 32 points right now. S&P is totally flat. It's down a quarter. The composite is up 15 cents out here. Russell 2000, we've covered that. It's down about $3.90. Now, I use a number of different tools. I don't necessarily show them all while I'm on the air. I'm going to try to maybe start sharing maybe more of those tools here over the coming weeks. One of the tools that I've recently added here, this is the eSignal charting application that I also take a look at. Now, what's inside here right now happen to be, our folks over at TAS, the Signal Box guys. And, folks, if you haven't had a chance to test that, there's a free video that's available to you at the homepage at TFNN.com. A lot of great tools over there. You've got the workshop that Tom and David are going to be doing here shortly. You can sign up and get the Art of the Chart software out there. You can do that for $1, so you ought to do that for sure out here. This happens to be the ES Mini. It's a 30-minute chart here, and this is showing the TAS signal box range out here right now on the 30-minute chart. And the mere fact that it's green, it's just telling you it's not any kind of a sell zone or anything at all, at least on the 30-minute chart here. I can a real breakout would be above the 1873 area today. So a close on a 30-minute chart above 1873, and it would be above all the congestion on the highway, so to speak, as the way that you take a look at the signals that it provides. Now, I can look at this on a number of different time frames out here. I can take a look at this on a 60-minute time frame as well. And on the 60-minute time frame, let's see here, 60-minute time frame, it's in the cautionary zone as we speak right now. A breakout on the 60-minute zone would be above 1873 as well. So a 60-minute, a 30-minute tells you you'd have a nice breakout potentially going on today with a close above the 1873. Now, this is a 60-minute chart versus the 30-minute. If we take even a look at a longer-term time frame, let me put the 120 up here. And we just take a look at the S&P futures, which are flat right now, just to get an idea. I could put the Dow futures up as well so we see what's going on there. Inside the Dow futures, the ES Mini on the 120-minute chart, it's using 1875 as the top of that box to clear all of its congestion. No sell signal or anything here, just really traveling sideways. But since we've got the Dow, that is the weak link out here, let me put the March contract for the Dow up here, YMH4 out here. And this is the 120-minute chart on the screen. Let's see what we've got here. What kind of signal here? So here, now this 120-minute time frame, this is going to end. Let's see, when did this one end? This was 8, so 10 o'clock. So this one already ended. So it actually gave you a sell signal inside of the Dow. Now your stop here has to be at about 16,410. You're trading at 16,352 right now. No, it still looks like this must be 11 o'clock when this 120-minute cycle here ends. But that's 120-minute chart. If we go over to the daily chart, we're going to find that it's truly outside of the range. So, go over, check out the videos that the folks over at TAS put together. Yeah, still in a nice buy mode here inside of the Dow. That's a daily chart. Now we can take a look at a stock as well. So what's cool about this? I could take a look at Apple as an example on a daily basis. Just see what the signal box here is giving us an indication of. And at this stage here, it's right now. It needs to, in order to have a real sell signal, it needs to be below about the 530 mark out there. So that's what's going on inside that world out here. Also, if we take a look at what's taking some emphasis, what is the weakness inside of the Dow right now? Inside the Dow, it's ExxonMobil. That's putting 16 points worth of pressure to the downside. Visa about 11 points. Nike about 5 points. That's to the downside. To the upside inside the Dow, it's putting energy. You've got Disney, Goldman Sachs, J.P. Morgan, and the General Electric. Speaking of the General, Basil Chapman is going to be up next, and it is Wonderful Wednesday. That means we got Larry Pesavento, David White. We've got Daryl Martin, and then the Tom O'Brien Show from 4 to 6. Have a great Wednesday, folks. Take care. See you in the morning.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.